Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is an edition where our focus is on the earnings of Shree Cement. Remember, the company has reported a net profit of up to 28.7% growth at 676 odd crore rupees. This is beat most of the street estimates. Even on the revenue basis, we've seen a jump of 6.5% on a year-on-year to 5,433 crores. It's the EBITDA figures that are substantial improvement, 59.9% of an improvement right there at 1422 crores, and the margins have also substantially jumped from 17.4% to 26.2% in this quarter. The sales volumes for the quarter for the company have grown at 8% year on year to about 9.53 million tons. Now, joining in to share with us what really contributed to the stellar earnings performance in this quarter and what is the outlook now, Mr. H.M. Bangur, the chairman of the company, really joins in. Welcome, sir. Thank you so much for taking the time out for this discussion. First up, could you tell us, congratulations on the good quarter first, and what really contributed in this quarter, sir, if you could highlight?
Most important thing was the volume growth. Now, it is little less than the industry growth, but still, it is very healthy volume growth of 10% or more. And we could have done little more, but because of some changes here and there. The other thing was the little bit higher realization than the market. Our realization really went up. And when I say went up, it is compared to the market, what was the earlier realization, and otherwise our realization is dropped by 3%. The other thing, which is the major thing, was that our energy cost will be low. It has been low this year. 56% of our energy comes from renewable and green energy, which is a big help. And now we expect to make it 60% in next 2 quarters, and this will be sustainable because once we have put the capacity, it will always be there. The other thing was that coal and power cost also has come down internationally. So our profits are higher despite lower realization compared to last year.
Okay, sir. Understood the key factors right there. Let's take them one by one. On the volume growth factor, sir, what is the volume growth band that you look at sustainably growing at for FY25 now?
It will depend on the India's GDP, and we expect India's GDP to grow at 7%. So Shree Cement will be growing at 10 to 12%. Industry should be growing at 9 to 10%. This is the volume side, and we are quite confident about it.
Okay, a volume growth of 10 to 12% you can look at in FY25, sir. Also, sir, since you talked about your realization, what is it at currently and what could be the output going forward? Since you did say some of the pricing factors were helping you, like coal and power costs, will they continue to aid your realizations?
Realizations in a commodity market, predicting it is really a very unhelpful exercise. So I will not talk about realization. I can talk about the cost. I can talk about volume. For next 2 quarters, the coal cost and others are almost the same. This should not be a problem. Realization side, normally every year 4% to 5% price growth takes place. Our prices should also increase. If it is lower in 1 quarter, it should make up it in another quarter. This has been the trend for last so long. So we are confident of about 4% price realization depending on the market.
Okay. So just help us understand a breakup of the demand scenario in terms of what has contributed to your sales in Q4, north side, east side, and also the south side as well. And going forward in Q1, do you see an impact on the sales and the demand because of, say, elections and perhaps, higher temperatures as well?
Of course, first quarter, April, June, the demand is less than what we were expecting. Mostly because of both the reasons you have given, election as well as high temperature. So it is very difficult to work in the field between 11 to 3:34. So that time the consumption is not there. Working hours are less, so cement consumption is less. Otherwise, inherent demand is high. Because of elections, people have gone out. It doesn't mean that infrastructure projects are lower or the demand is lower. The whole thing will come back again in July September period, because whatever is, it is only the deferment of demand, not the reduction in demand. Economy is strong.
Okay.
This is,
Yes, sir. Please continue. Okay.
yes.
Right. So, sir, I also wanted to understand a little bit on your premium sales as well as a component. How was it in Q4 and where do you see it in FY25? Because I believe earlier you have mentioned that you want to escalate this segment as well. How are you looking at this space?
Our premium segment will be very much there. We have recreated the new brand only in February. So within 3 to 4 months, the brand has not caught up fully. It will take 6 months times minimum to come up. Till now, it is around 11 to 12%. Even after little price rise, the same demand pattern is there. So we are very hopeful that next 3 months it should go up to 15% or so of our trade sale. And this is the, we are very happy about and confident about what we have created. New brand with a new logo. It has been taken well. It has been further premiumized. Now, compared to the earlier premium cement, it is 5 to 10 rupees higher price, and the quality is still better.
Okay, understood that. Sir, also if you could help us understand, since you did say the price hikes or something as a factor that helped the sales, how much was the price hike in total that you took in FY24 and what is the outlook going to be? Are you continuing to take some price hikes?
Price hikes will depend on the market. Between 23 and 24, on the yearly basis, prices were almost flat.
Okay.
And 24 to 25, uh, the flat prices doesn't mean lower profitability because the costs have gone down substantially. This year, depending on the cost and the market, we expect 4 to 5% price rise.
And this will be spread across the year or would you plan to take it in the first 1 or 2 quarters of this year?
Now, here is the point. It is not a monopoly product that we plan to take it. As the market, there are 20 people in the market or maybe more. So we have to be with the market. Price rise has to take place because of the cost pressures. So as the cost increases, prices will definitely increase. So
Okay.
we plan to take the price hike from second quarter onwards. First quarter the demand is low because of elections and heat. And now from second quarter to fourth quarter, in the 3 quarters, price rise will take place.
Okay, understood that, sir. Price hikes to be coming in from Q2 of FY25. Now, sir, as far as your capex plan is concerned for FY25, how will that be? And even in this quarter, you commissioned one of your projects, sir. If you could highlight about that also, how soon will it start to contribute to your books? And then capex plan for your FY25.
Uh, our four projects are going on. One in UP, one in Rajasthan, one in Chhattisgarh, and one in Karnataka. All four will be completed in 10 to 12 month period. Either some of them will be in the fourth quarter of this year, or some of them will be in the first quarter of the next year. So about 5,000 crores of capital expenditure is online on these four projects. The rest will take place later. We have lined up our projects for 15% CAGR growth for next 4 years.
Perfect. Sir, would you have to take any fundraise for this capex at all?
No, we don't. We have our funds. Profitability will be there, so we don't need any loan. Also, no chances of any capital increase.
Okay. So, any plans for using your cash on your books, maybe by way of acquisitions? Is that on cards?
Acquisitions also will come in line if it fits into our overall plan. Then we will definitely look at it. There is no big no to anything. If it doesn't suit our plans, where we want to be at the end of 5 years, we will not look at it. So we have our plan where we want to grow, how we want to grow. So whatever comes in the way, we will take it.
Okay, sir, understood, sir. Also, one more point, sir, which I wanted to understand from you. There is this entire talk about more players entering the cement space, consolidation, M&As as the top point. How are you looking at the competition building up, sir?
The competition will always be there in all commodities, and slowly some consolidation is taking place. It will take long time, and finally 10 to 12 people will still be there. India is a big country, unlike Europe. India's present consumption is 440 million ton, so it is quite high.
Okay,
So
wonderful. So that does not deter you from holding the one of the top spots that you hold right now. There is no competitive pricing or maybe predatory pricing that could be coming in, discounting coming in because of that.
Uh, we will be growing at our speed. We want to grow at 10 to 15%. Sometimes some people will be growing faster, some will be lower, but we are not looking at the competition in this way. Market is our competition.
Okay, understood, sir. Thank you so much for speaking to us on Business Today Television and sharing all these wonderful insights. Many congratulations yet again for stellar set of numbers and all the very best for the upcoming quarters. So, hoping to see you back soon on Business Today.
Thank you.
Thank you so much, sir. With that, we wrap up this special conversation, viewers, with Mr. H.M. Bangur of Shree Cement. Right there, clearly a lot of headlines coming in from the quarterly earnings, and of course, what is the outlook going forward. Price hikes definitely could be on the cards as far as FY25 is concerned, starting from Q2. Then you also have a 5,000 odd crore rupees capex on the line, a growth outlook of 15% on a CAGR basis as well. A volume growth of 10 to 12% for FY25 is something that the management is confident of looking at as well. We'll wrap it up at that, but do stay tuned as we continue to get you more insights from the world of business and finance on your screens.
Snapshots frozen in time.
पहली बार आप रायबरेली कब गए?